Hi everyone, welcome back to another exclusive podcast from IronFX where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. In today's podcast, we'll be talking about trading the news, strategies for capitalizing on economic events. Right, so as we all know, there's many economic events out of Europe, Asia, and the USA that could act as potential catalysts for currency markets. Right now, this could be bullish catalyst or a bearish catalyst. But first of all, how do we identify such key economic news events? One good website is Forex Factory. Now, many of you may be familiar with Forex Factory. For those who are not, just type in Forex, Forex, and of course, you guys should know Factory, Factory, into Google, and the first result that you get will be that of Forex Factory. Then you click on over to the economic calendar, and there you would have the list of all the key economic events for that day. And the good thing about Forex Factory is you're able to filter for the news as well. So you can select the date range. You can look at it at a 1 day time frame, or you can look at a 5 day time frame, or even longer. And of course, then you can set it according to your local time as well. I generally like to use GMT time, which is UTC plus 0, but use any other time zone that you are familiar with. And the other thing is there's also 4 levels of impact that you can choose. So to look for the truly high impact values or news economic events, click on the 2 most impactful options, and then you can also click all the event types and economic types as well as the currency type as well. So in general, it's good practice to select all the currency pairs and the economic events and the economic types as well. But in terms of the impact option, select the 2 most highest. So that helps you to filter out a lot of unwanted economic events that take place throughout the day. Now that you know how to identify and filter and look out for key economic events, we can then move on to the next part. All right, okay. In general, also just one more thing I would like to add is the good thing about Forex Factory is also everything is color coded. So when you see a red folder or red icon or an orange icon, that means that is a very high impact economic event. So it's very easy to appreciate, and it's very easy to visualize and understand as well. And not only does Forex Factory gives you the forecast for that particular news event, it also gives you the past data as well, and a graphical plot to track how that economic event has played out over time. In addition to the graphical layout, there's also information where they provide the actual link to that particular data point, so you can read up more about it from the relevant website as well. Alright, so there can be many different strategies for trading the news, right? It can be breakout trading, fading the news, or trading based on economic data surprises. So economic data surprises is a phenomena where the result comes in perhaps much stronger than the forecast or much lower than the forecast. So that's what we mean by surprises. It could be positive surprises or negative surprises, right? So for example, we all know non-farm payrolls in the US, or NFPs, are one of the most highly anticipated economic data events of the month, and many traders do trade them. And of course, with non-farm payrolls, because it is an employment data metric, this is released every month. Now, maybe perhaps we can't wait every month to put on a trade. What else can we do with regard to employment data or data that is similar to the NFPs? Right. Another data point that comes out of the US on a weekly basis are the unemployment claims. Now, this comes out every Thursday, and if you go to Forex Factory and search for it, you would find out exactly when it comes out and how it has been how the data has been presenting itself as well. So just in general terms, if you want to play something as or trade rather something that's an event that's as impactful as NFPs, but you can't wait every month, unemployment claims would be something that you could target and try and backtest on. Now, what are unemployment claims? Basically, it tracks the number of US citizens who are filing for unemployment benefits every week. So if there are more people filing for unemployment benefits, that means that the labor market is perhaps starting to weaken in the US. But if you have less and less people filing for unemployment benefits, that means the labor market is robust and hiring is probably picking up. So that's how we can interpret the uh, unemployment claims. Now, the good thing about Forex Factory as well, all the data or the results of the data are color coded. So it helps us to interpret the actual results. So if that particular data is green, that means it is better than the forecast. That means it should act as a bullish catalyst for price. So in this case, in the example of unemployment claims, if the data is green, this means it would be bullish for the dollar index. So that means dollar index will rise, and the major currency pairs such as the euro and the pound will fall along with gold prices, and of course dollar yen will rise. Now, conversely, if the data is worse than the forecast, it'll be color coded in red, and this typically means it is bearish for price. So that means dollar index will fall, dollar yen will fall, but of course the euro will rise, the pound will rise, and gold prices should rise as well. Do take note that the result doesn't always reflect the actual price action. So it could be a case where the data is better than the forecast, but we may not see a bullish momentum play out. So do take note that it is generally uh, important to recognize that, and we should take it as a general guidance rather than the absolute fact. Alright, so just to go over it again. So if unemployment claims come in lower than their forecast, this means there's less people filing for unemployment benefits. That means the labor market is growing. So this is bullish for the US economy. So this is bullish for the dollar index. So that means dollar index will rise. Conversely, if there are more people filing for unemployment claims, that means the data is worse than the forecast. This could potentially mean that the labor market is starting to weaken. That means the economy in the United States could be slowing down, and hence the dollar index or the value of the US dollar will fall. So that's generally how we can interpret this data as well. Right now, how would we trade this data news? Because it is not possible for us retail traders to actually predict accurately how this data is going to be presenting itself. So I would say it's better to wait for the actual data to be released, then look at Forex Factory and interpret the data based on the color code, and then place your trade accordingly. Because because volatility can be very high during this period, just like NFP claims. So if you were to take a position prior to the release of this news data, and if you don't have a wide enough stop loss, we could very well be stopped out. So that's just a waste of a trade, right? So in this scenario, for this particular data point, it's better to wait for the data to be released, then check Forex Factory and quickly determine what is the outcome, and then place your trade accordingly. Because if there's no other economic news events or key economic news events around this period, the momentum is usually sustained. So if the data is good, we can quickly do our technical analysis using your favorite indicators, and on the 5-minute, 15-minute, and 30-minute time frame, we can quickly determine the key support and resistance levels, and then we can enter the trade accordingly. Because the momentum is usually sustained as long as there are no other major economic events that take place around the same time as unemployment claims. Now, how much of a stop loss or how wide of a stop loss should we place? Ultimately, it depends on your risk reward ratio at an absolute term as well as a percentage term. But generally speaking, once you've done the technical analysis beforehand and when the actual data is released, we can try and identify the recent high and lows, perhaps based on the 15-minute chart. And once you have determined the recent high and low based on the 15-minute chart, you could probably give ourselves a little bit of buffer by placing your stop loss about 15 or 20 pips slightly away from that high or the low, right? So that's how I would place my stop loss with regards to taking the trade once the data has been released. So do take note, if because volatility is very high, it probably does not make sense to actually put on a trade before the news is released, because if we don't have a wide enough stop loss, it's just going to be a wasted trade. All right, so do take note, this was today's podcast was on trading the news and strategizing and strategies for capitalizing on economic events, and in this particular case it was for unemployment claims in the US, which is released on a weekly basis, right? So we don't have to wait for the monthly NFPs to take a trade, a high impact trade such as this. All right, anyways, that's it for me for today's podcast on trading the news, strategies for capitalizing on economic events. Do remember to subscribe to our podcast here at IronFX, as we are dedicated to bringing you the very best education to take your trading to the next level. Until then, stay safe and trade safe. Thank you.